Hello, good afternoon, everyone. Welcome to our midday market update for Wednesday, January the 25th of 2017. This is George Papazov, founder and head trader here at Trade Pro Academy. I want to remind you, today's presentation is for educational purposes, not to be taken as investment advice. The risk in trading in market is substantial. You should consider if doing it is suitable to your own situation. Trade Pro Academy is not responsible for any liabilities arising as a result of your market involvement or individual trade activities. Awesome. Great. Well, for those of you that have your Dow 20K hats, blow the dust off. We've broken 20K. So Dow's above 20,000 on the index, off the fresh highs on the SP 500. Everyone's having a party. Everyone's happy. Phenomenal. All right, above the highs here. S&P's above the highs as well. NASDAQ's broken above. Russell, however, isn't having it yet. It's not really ready to celebrate. And again, Russell was an area of a concern for us last few days. We were still bullish. Don't get us wrong. The sentiment was always bullish through this, but Russell starting to break a little bit below, got us a little nervous. But 2,300, my call in December was S&P 500 will be at 2,300 before the end of January. Is it going to happen? We pretty much are there, right? What is the high here? 2297.30. Now, some of you listening to this might be impressed. They might say, wow, you called that. What does a call mean? It means nothing. All right? A call means nothing. You should ask a guy that goes and makes a prediction like that how much money they made off it, or did they trade it? That's the more important aspect. Who cares? I can make calls wherever I want. And to tell you the truth, yesterday wasn't a phenomenal day. And I got to be honest with you. There's traders out there or educators primarily out there who will show you all their winning trades, but when things get wrong and they get tough, they said they had a dentist appointment. They were in front of the computer. They didn't do this. They didn't do that. They missed it. Well, that's all a bunch of BS. This business comes with losing days and bad days, and I'm afraid to admit them. Yesterday, I didn't have a good day. Missed the rally. I started shorting. Quick stops, though. I was shorting. I didn't get butchered. Quick stops on the end towards the close. I shorted it, made my money back, and then some. And ended up 600 for the session. Not bad. Not a bad day. Short of my target. Very short of my target. But point is, I went from a negative to a positive and sticking to my conviction, watching my trades and following my plan. It wasn't a good day, despite me being up money. Really, at the end of the day, I graded myself as probably a D. I did my review. I took what I needed to away from it, and it was a learning lesson for me. Today, I'm trying to play the long side, all right? We're bullish. Market's going to continue upwards. I think 2,300 is the next stopping ground. Let's look at a few interesting things here on oil. We had inventories that were all a build. What does a build mean? It means supply is higher than demand. So there's a build of inventory or an oversupplied market. What does oil do? It goes in and rallies. Whereas it rallied to about 53.48-ish or so. So what we did in our trade of the day, really the blockbuster opportunity where we made our money, was shorting oil. So if we go here into crude, this is CQG, integrated client, offered to market delta. So if you look at our only opportunity here, one long. Wait, what? I gotta cancel these orders. How am I long one? It says I'm not. Anywho, one long on ES. Sorry, I got confused a little bit here. What do we do? This thing popped on the inventory data, 53.44. I clapped the short here, gave it a shot. And for those of you that don't know what inventory trading is, well, you got to look it up. You got to know that before you know what I'm talking about here. The inventory report showed a build. The oil rallied. It got really thin on the way up, and then it got really volume-esque towards the top. We had one shot, 2, 3, couldn't pop it. So I shorted. 4, couldn't pop it. And then we keeled over and pretty much died on oil. Found support at around 53.10. All right, that was my blockbuster trade there for today. It's all pretty much done. Currently long the ES. And you can see that here. I'm long some S&P 500 futures at these POCs around 88.5. That's what I'm kind of tracking with for the morning. I'm still with that trade. I think the afternoon we could see some more upside. In oil, what I'm worried about, it's forming some triangles here on lower volume. Volume is virtually non-existent on the S&P 500. All right, S&P is climbing as volume is weak. Usually what that tells you is that this rally might have legs, but volume has to come out soon. More people have to start buying. Low volume on a high advancement day means that it's just a short squeeze. Everyone shortened this S&P 500, so a lot of people through December and January finally got squeezed out. George Soros, he lost $1 billion shorting the market. He's still short. Some shorts never learned. You know what the problem with a short seller is, a perpetual short? They want to be right. All right, they have a desire to be right. They have an ego to satisfy and a thirst to quench. That's the problem, is that they're biased, and their bias doesn't change. They want to be right. Look, for Soros, losing $1 billion ain't that much. It's not a big deal. The bigger thing for him would have been if it dropped down for him to tell his buddies, see, look what I did. Ha ha, I'm still the man. I still got it. The money isn't really an objective for him anymore. Not for me. I got a mortgage to pay. I got a couple mortgages to pay, actually. I got a few properties. So I got to get out there and service that cash flow. I'm not doing anything stupid. I don't need to be right. I need to be profitable. Massive difference. I need to make money. I need to bring home the bank. All right. Without trading income, I'm not doing well at all. So I rely on this as a living. That's the difference between people who do this for a living and people who do this to be right. The ones that do it right will lose money. Why? They're short. They'll short here. They'll short here. They fail to see the transition of the SP 500 in the last couple of sessions when once, twice, 3 times, 4 times, 5 times, 6 times, 7 times. We can't break the support level. All right, what does that mean? We got a whole pile of people short. What does that mean? We're going to squeeze them out. That's why volume's low. This is more of a short squeeze than a really enthusiastic rally to the top. Yeah, Donald Trump signed the Keystone Pipeline. Yeah, he's talking about a lot of things that are positive to the economy. But he's also about to pass an immigration bill that bans a lot of countries, just outright bans them from high-risk countries, is what it's called. So he said it on Twitter. Anywho, I'm not into politics. What I'm going to tell you is the risk is higher than the current market's pricing in. Look at VIX. VIX is just getting monkey hammered on these lows, 10.7. The low of the move was 10.6. The all-time low was 8.3 on December 18th of 2006. So, yeah, there's a lower point than this, but we're getting pretty close to the all-time low on VIX. This basically means there's not a freaking thing that would scare you if you're long, and there's no fear at all in the market. This is very – if I had to split it, and we usually do on the VIX, below 14, this is no fear. This is just flat-out greed. Above 20, it starts to be more fearful circumstances in the market. So right now, VIX is pricing in no chance of anything happening or going wrong in the market. Well, you have an administration who's full of cabinet and appointees who are completely have never done this job. All right, that's risk right there. You got the risk of how they're going to unwind their fiscal stimulus. And here's a 20 that nobody's talking about. Everyone will tell you about Dow 20K. Nobody will tell you about U.S. debt 20 trillion that's going to be surpassed this June. Show me one person talking about this. There isn't. You know why? Because this is really convenient to glaze over. Yeah, but the market's at all-time highs. Yeah, but there's $20 trillion of U.S. national debt that'll be surpassed this June. Let me see someone talk about this. All right, here's the real scary part. You look at this on a per citizen basis. All right, there's $393,000 of assets per citizen, but liabilities $876,000. It's almost 2 to 1. All right, savings per family $10,000. What is that? What will $10,000 buy you in 2017? All right, total debt. You look at this on a world debt clock. The United States is 99.2% external debt to their GDP. That means they're in debt to the same degree as what they produce. So you got to produce for a whole year to get, and no one gets paid in order to work that debt off. There's countries doing much worse, like look at Ireland, 565 to 1. But the point is, for a major Western civilization with these kind of assets, kind of potential, there used to be growth for a big industrial country like that, 99, that's scary. Look at China, 8%. Yeah, they export a lot. I get it. They produce a lot. They're the world's producer, and U.S. is the world's consumer. So be careful. What I want you guys to see here, and I wanted to lead off with this, is that, look, markets are at an all-time high, but if you're looking for the market and the economy to do the same thing, like I told our guys in the trading room this morning, if you're an economist looking for that relationship to hold to be true, you got fired in 2009 because you've been terrible since. The economy and the market are two separate things. The market is more linked to the Federal Reserve and their ability to pump and print free money than it is on what the economy is saying. If you look at the real economy, wage growth, there hasn't been any. All right, there hasn't been any wage growth. Families now are getting paid barely more on an inflation-adjusted basis than they did 25 years ago. That reeks. You know who's getting paid more? Corporations, all right, top-end executives, which is fine. They work, they earn that money I mean, arguably, who knows? But what I'm saying is you got to be careful in making assumptions. The market's going up. It's doing so on free money. The economy is not there with it. The economy has long diverged. Labor force participation is low. It's lower than it has been the last 2 decades. All right, yet this thing chugs along. Do not fight Capitol Hill. Do not fight City Hall. What I mean by that is keep going with the flow. I'm going to tell you one thing. Who's seen The Big Short, that movie? If you've seen it and liked it, if you thought the 2008 financial crisis, the meltdown and the housing bubble burst was interesting, wait till you see this central banking bubble that's going to pop. That's going to be the greatest short in the history of our lifetime, easily, hands down. It just hasn't happened yet, and it won't happen until it does happen. And stop betting on it happening just because we're now at 2,300. We're at 2,300. It's going to be a disaster. It's not a disaster. You're going to get short. You're going to get squeezed out. It's going to be 2,500. It'll be a disaster. You're going to get short. You're going to get squeezed out. It'll be 3,000 when you go broke. And you got not a single penny to your name. And you're going to be singing the same tune. I want to short this thing again. Darn it. Let me borrow some of my friends' money. You're going to short it. You're going to lose that too. And what's going to happen when you have $0 in your bank account and you're in peak debt and maximum angst and anxiety and fear, you're going to be right. But guess what? You ain't got any more money to make it. Right? So what I'm saying here is there's a saying, the markets can remain irrational longer than you and I can remain solvent. Stop fighting the darn thing. I can't even talk today. Stop fighting the darn thing and start buying the dips. That's what everyone else is doing. Get in there. Get with the action. Next week, it's going to start to heat up a little bit. All right, we haven't had a lot of economic news to start the new year. Next week, it starts to get interesting. Wednesday, FOMC statement and a federal funds rate. The Fed's back in the picture. All right, next Friday, average hourly earnings, non-farm payrolls. Let's have a look what happens. All right, this is going to be a massive indicator for the market. See how the labor market's held out and how it is holding out. Retail sales from all my research analysis showed that they sucked throughout the holiday season. They were terrible. Online sales did not make up for the retail aspect either. So spending's down. So it's interesting to see consumer sentiment on the back of jobs as well. Start looking at the peripherals. Be educated about this stuff, but don't trade it. For goodness sake, all this economic thing, doom and gloom that you have in your mind ain't going to help you. You're going to continue to get squeezed to the upside. You want to see who got squeezed? I'll show you who got squeezed. Everyone's saying, well, who's buying this stuff? And I'm going to explain a very important dynamic of the market to you guys in just 1 second. Who's buying this stuff? You ever wonder that? Who's buying these highs? Who's buying it? There's got to be somebody. I'll explain who's buying it. Just give me 1 second. Well, actually, this is it right here. Yesterday's Commitment of Traders report showed 41,000 contracts got added to the short side from hedge funds, and they cut their long. They said, screw this long, we're piling in onto the short. What did the institutional guys do? They were smart. The institutional money is the smart money. They cut their shorts and got long and put some in cash. Let me explain to you what 41,000 contracts means on a dollar, on a notional value. 41,000 contracts short, all right? You multiply that by 50 times the index value. What's the index value right now? Let's say they short at 22.65. That was the average. What is that? You got about 4 billion notional of shorts that are going to get squeezed on the hedge fund just from last week. Of course they're going to get squeezed. That's who's buying those contracts back. That's why volume stinks on the S&P 500, because this rally is not induced by buying. This rally is induced by a short squeeze. That's how it always happens. Shorts get squeezed, it comes down, and then the longs get in, and you want to see volume kick in. I'm going to explain something very important to you guys here that Barbara, one of our trade pros here, asked, and I thought I'd explain it. She said, well, something along the lines of explain why you think it's going to go up. I said something in the chat room, and she asked for me to explain it, and I figured I'd do it here. Let me explain something to you that I'd say 98.996213% of traders out there listening to this still don't understand. And I just made that number up, but it's a high number. Look, here's what S&P 500 is doing on a daily basis. What do you see here? These are short levels. These are levels that were stuck in a consolidation. We kept hitting a new low, kept coming back in, kept hitting a new low, coming back in. And we did this 7 or 8 times. All right, we did this 7 or 8 times. What happens? You got a whole bunch of shorts right now that are being paid. They're profitable. They're like, hey, we'll keep shorting the highs. And then we come in here and break out. Well, what happens at this level?
stops start getting triggered. Buy stops, right? If you're short, a buy stop gets you out of the market. And this is one of the truths that you need to know. When you're selling into a market, you got to buy to close your position. So you're actually a buyer to exit. All right, so here we go. You get your buy stops taken out, the market breaks out. What happens if you're short here? Well, let's say you survive this. You said, oh, well, I'm going to wait for a dip. All right, guess who else is waiting for a dip? Buyers and short sellers. Why are they waiting for a dip? They're not going to take a loss at a high. They're going to wait for it to curl in. And what do? The ones that haven't got squeezed here start buying. Guess what? The second they start buying, they pop the market and run away from the other shorts. These shorts start to get nervous, and they chase it higher, and it continues to rip. And above this high, everyone just throws in the towel and says, screw this. I'm out of this. I got to get stopped out. I can't continue to lose money. And guess what happened as soon as that happened today? Guess what happened? It shouldn't surprise you much. All right, we squeezed out some shorts. All right, opened strong, squeezed out some more, hit the R2. Pivot was 71.92 for the R2 is 92.92. Stall in reverse. So how about that? Now the question is, are there buyers? Great, we squeeze all the shorts, we squeeze them dry, hedge funds are out. Are there any more buyers at these levels? And if there aren't, the shorts are gone. Now there's no more buyers. All right, and if there's no more buyers, and there's no more buyers, guess what? Down she goes. You guys have to understand the dynamics of how these markets move. If you don't, you're doing yourself a massive disservice. Let's look at some other markets. Dollar index 100 will probably hold here for a bit, at least temporarily. I expect to bounce to 101s, and then we can continue on the lower side here. Gold, yesterday I told you don't be buying gold near 1220s. Some listened, some didn't. Look, you don't have to listen to me, but listen to your strategy and listen to your discipline. And if you bought it towards the 1220, then you better be stopped out already. If you're not, you're turning edge into hope. All right, and our trade pros know exactly how that works, don't they? All right, bonds continue to weaken. Oil continues to stay sideways. Equity markets are ripping higher. One thing I've been tracking with is market breadth, and let's see how market breadth is doing today. To be honest with you, I haven't looked at it, not once today. So let's look at it today. Yeah, that's right. Pivot was the answer to the pop quiz. Look at this. Market breadth is rebounding. Great. It's coming back. It's roaring back. On the 100, there's now 67% of stocks that are above their 100-day moving average. It took out this high. This is good. Breadth is now confirming the market move. I told you yesterday this 100 bouncing off this 50 here. This was a great indication for a potential continuation. And the stocks above their 50-day moving average are at 74. They're not yet overbought. You start to hit overbought into the 80s and 90s. So what does that mean? Index has got room to run. I'd say 2320 could be a potential top for the SP 500 on the index. Futures, 2310 or so. Heck, I remember a couple months back when we were trying to take out these 2200s. Remember this? 2197, and it failed, and it took the Trump rally to get back into this 2200. So careful for 23. On the futures, if you get 22, 98, 50-ish and above, start to wonder, and that's a pretty convenient level for a reversal. What I'm saying is if you're targeting 2300, I hate when traders come to me with a strategy say, I got a target. Nobody cares about your target. Only you do. This just in. Your target means nothing to nobody. All right? So somebody said, I got a 2300 target. I say, well, you better take it at 22, 98, 75. What's a few extra ticks? All right? Your probabilities, your payout's lower, but your probability is much higher. And if you don't understand that as a trader, then you're spinning your wheels in the mud. And I can almost guarantee that. If you don't understand that dynamic of taking less profit for a higher probability, then you're the guy that buys down here, has the profit, and can't figure out why you lose every trade and get stopped out after having a 20-point upside trade. You know why? Because you didn't take the profit. How are you not going to lose money when you don't get paid when your profit's on the table? I don't get it. I don't get how people are baffled when they let 20-point runners, 10-point winners turn into nothing. Not sure how you expect to make money in the business if you can't get paid. All right, that's breadth. Transports are now on board as well with the S&P. Gold's got some more downside, I think. Stay away from it. Let's look at currency, and we'll call it a session for YouTube. Trade pros, we'll talk about a few trades. US is still weak. This purple line here. The one that's strong right now is the pound. All right. I'm starting to look around for a GBP USD short. I am. Okay. Despite the soft Brexit news, I think that 127 here could offer some initial resistance levels for a pullback. So it'd be more of a fade. Look, I've been trying to get long the pound since 121. I just kept missing my fills. And we ran away. And I don't chase anything. I don't chase anything. The one thing that I've chased in my life, I'm now engaged to. So, hey, I don't need to chase anything else. Makes sense? We broke above the 100 on the pound. Jap yen. Giving up some of that strength on the US dollar. I think we start to see some supports around these 112s. We might not be done with the selling on the dollar yet, so careful buying the yen. But I like that. I like Euro USD for shorts at around 108. Get these 108. There's going to be a lot of offers sitting waiting to clobber this. So we're due for a pullback. It's going to happen. Right now, all I can tell you, trade the upside. If you're selling, like, look, I just got long down here. I'm giving it 1-2 rotations below this POC, below where I got in. I'm going to puke. Why? Because we really need to, we've squeezed out everyone on this retracement. You can see sell imbalance is coming in. All right, buy imbalance is starting to shift over, building a bit of a bullish bias, but we can't get above these 90s. Why? Because there are no shorts, or there's no longs rather. Sorry, there's no longs coming into the market, and all the shorts are gone. They've already bought. They're squeezed. The question is, who's coming up next? Who's going to push it higher? If there's no shorts to buy and get squeezed out, and if there's no buyers to buy these highs, then we're going back down. And that's what we're watching for. Buy imbalance, support, VWAPs here, POCs, low volume ledges. I think we rally back up to the 92s. Today, I think we close on a high. It's called nachos. That's what I'm waiting for. I'm waiting for nachos today. New highs on the close. We had nachos yesterday. We might have nachos today too. All right, guys, have a great session for YouTube. All the best. Hope you enjoyed this midday update. Upside's the right side. Just pick a good location to get long. If you want to sell this thing and fade it, I'll give you some fading levels as well, free of charge. Fade these 91 halves. That's fade all day here on the ES futures. Try them up there. All right. I'll tell you one thing, though. I'm long in front of everybody. I don't hide my positions. I hate these guys that go out there and tell you what to do, but won't show you what they're doing. What's the point? All right, what's the point? If somebody's telling you what to do and explaining things to you, they better be showing them to you too. Trading is not a white-collar job. Trading is a blue-collar job. It's all about grit, determination, grind, and work. All right, if you're looking for an easy way out, go do something else. Go get a CFA. Go get a job and work for somebody. If you're looking to make money, ditch your bias, forget being right, and get used to working hard. Because I'll tell you one thing, trading is probably harder than you think it is when you're first starting out, but it's easier than you ever thought it could be once you actually get it. I'll put it that way. Take care, guys. Have a great session on YouTube. If you have any questions, email me, info@TradePro Academy or Georgia Trade Pro Academy. Sign up and join the Earn Package subscription. You get access to our trading floor. Today, all we've done is talked about trades, went back and forth, and discussed it. I should probably blank that out so I don't broadcast everyone's info. But become a trade pro. Join the Earn Package subscription. What you get in there is a live daily trading room with entries, analysis, commentary, and participation amongst the group. And I can tell you one thing. We probably got the best group of traders. I love them. I love you all, guys. Bye, YouTube. Take care. Trade pros, hang tight. I'm going to talk to you about a few trades and our exit for the current one. Take care. Goodbye.